Hello and welcome to the Weekly Outlook by Adam Woods for BOAFX Trading Signal Solutions. We're going to start by going through the calendar and then we're going to move on to the charts. Okay, so let's have a look. Monday, 12:30 AM, we've got Aussie dollar building approvals month on month. I am going to be looking at the Aussie next week, but I'm not going to be using this particular news event to instigate any trades. I will be keeping an eye out on the actual that comes out there, though. At the moment, it's forecasted to slightly lower. HSBC final manufacturing PMI from China expected to come in line with previous expectations, which is going to be good for our Aussie in the long run. Okay, and we'll get more into that as we go through the calendar. Pound manufacturing PMI expected to come in slightly softer at 51.5. I'm starting to look for good data on the pound now. We've got the MPC official rate statement this week. So it's going to be key that we start getting some good data coming up towards that. I am looking for the pound to start to rally this week. So it's all going to start. I'm not looking to actually take trades any higher than 159.50. And when we go through the charts, you'll see why. But I am looking for that data to start coming in and supporting it now. ISM manufacturing index from the US dollar, slightly weaker. Again, looking for this now to support our buy trade on the pound. So slightly weaker US dollar would also work in our favour this week. BOC Governor Pollard speaks from the Canadian dollar, steering clear from the Canadian dollar at the moment and waiting to see a bit more of a policy change from the Bank of Canada. So I'm not really looking to trade that next week. Aussie dollar retail sales and trade balance on Tuesday at 12:30. Again, looking for some stronger data now on the Aussie dollar. You can see there the retail sales might be slightly higher. We did have a good retail sales from the Aussie last month, which gave things a little bit of a bolster. We've also got the cash rate at 3:30, and this is the big one. We've got the RBA rate statement at 3:30 AM on Tuesday. So this is the first real trading opportunity that I'm looking for. And what I'm looking for is when we go up to the charts, you'll see why. I'm looking for the RBA. I don't expect them to be hawkish in any way, shape or form. But what I am looking for is them to slightly move away from the dovish tone and maybe have a bit more of a neutral tone. I still expect them to try and talk the currency down by saying it's historically high. So we could still get a fall in the currency, but that's kind of what I'm banking on as well. And when we go to the charts, you'll see the reason why. Okay, so Euro got Spanish unemployment change. Euro's in absolute dire straits at the moment. We are. It's falling. It's bounced off that 12500 level. Any sort of data other than really special is gonna cause that euro to drop. Any strong US dollar is going to cause the euro to drop. Any weak euro data, PMIs, anything like that coming out next week is going to cause that euro to drop. Traders drastically losing faith in any upside potential on the euro at the moment. Okay, GB, the pound at 9:30 on Tuesday. We've got construction PMI. Out there as well. Again, it's still looking like it's coming in softer, but I'm hoping to see if we can get a bit of a turnaround and get a slightly stronger construction PMI figure. US dollar trade balance, again, looking for a slightly stronger figure coming in from the US dollar. So we've got to bear that in mind as well. US dollar trade balance, the GDT price index on New Zealand dollar, the dairy index. We are going to be looking at that. It did come in slightly better previously, which did cause the New Zealand dollar to rally. Currently still in sell positions, looking for that long-term sell down to 65 cents on the dollar, on the US dollar for the New Zealand dollar over the longer term. So hopefully with those prices bolstering up last time, it may have a little bit of a drop off this time. We've had some poor data from New Zealand dollar recently. RBNZ still trying to talk it down. So we'll go and have a look at the chart on that one, and we'll see where we stand with that as well. Okay, again, Canadian dollar 3:30 on Tuesday. Not really looking to trade that. New Zealand dollar, again, we've got the employment change quarter on quarter expected to rise slightly, and the unemployment expected to drop. Again, strong figures there expected for the New Zealand dollar. So we're going to go back and have a look at the charts and see whether it's worth exiting those trades that we've got running on there at the moment, or whether it's worth holding on to them. Okay, so Wednesday, Japanese yen, BOJ Governor Kuroda speaks. Japanese yen announced that they're going to be continuing with QE and adding further QE, causing Japanese yen to weaken the other day. Don't expect anything to change on that, other than the fact that the Japanese yen, US dollar Japanese yen, are looking for a pullback and some way of getting a pullback on that currency pair so that we can get in for the buys. Maybe there might be a slightly more hawkish tone from Kuroda, who might say something hawkish. looking to instigate that pullback. Okay, so we'll be looking for that amongst those alerts. 9:30 a.m. on the pound services PMI on Wednesday. Again, not particularly looking to trade this in as a single announcement, but certainly looking to get into pound for the rallies. It comes in softer. It's not going to be much good for us. ADP non-farm payroll on the US dollar at 115 on Wednesday. Again, always a good sign of how strong the non-farm payroll will come out. So hopefully it'll give an indication of what's going to happen on Friday. We're not looking to particularly trade that. If anything, I'll be looking to sell the euro during that period. Aussie dollar, we've got the employment change and unemployment rate out on Thursday. Unemployment rate down to 6.1%, but we do know this is a lot of part-time jobs that have been filled. So whether that will hold at 6.1, I doubt it. I think we may get a bit of a rise in there, causing a bit more pressure on the Aussie dollar. And again, we'll look at the charts and see how we can trade that next week. Pound at 9:30, manufacturing production month on month. This is expected to get slightly better. Any good data on the pound is going to help. And then at 12 o'clock, we've really got where things start to heat up. We've got the asset purchase facility. We've got the official bank rate on the pound. I don't expect that to change, but what is important is the MPC rate statement. Okay, that's going to be the key thing here, what we need to listen to. We need to listen to that rate statement. We need to establish if there's any hawkishness there at all in the pound that can help it rally. It does seem to have hit a bit of a floor at the moment, round about that 160 to the dollar. We're hoping that's going to hold and it's going to start the rallies from that point. Okay, but we need to get some good hawkishness from the MPC. Don't forget, we still had a split vote here. We had 2 to 7 voting for a rate hike in sooner rather than later. We got the euro minimum bid rate at 12.45 on Thursday as well. That's also going to be important. The euro in dire straits, as I said. I don't think it's going to change, but then we've got the ECB press conference at 1:30, which is going to shed some light on how the ECB are going to act around the fact that about the inflation is just not improving. Germany heading into deflation now. It's in trouble. They've got to do something. They're going to have to announce further QE. They've got no choice. We're going to see that euro drop. We're looking for targets of 12100 next week. Okay, IB PMI on the CAD. Again, I'm steering clear of the Canadian dollar at the moment till we get some more direction from the BOC. RBA monetary policy statement on Friday at 12:30. Very important. Got to listen to that. This is where I'm hoping that the RBA has that the Aussie dollar has hit its bottom price, and this is where we can start to think about buying it back. Anything bolstering by the RBA could help us do that. So this is the very important alert. So really, we've got Thursday on the pound, we've got Friday, we've got Thursday on the euro, and we've got Friday for the Aussie dollar. This is where I'm going to be looking to trade the most next week. Okay, Canadian unemployment change, unemployment rate, again, steering clear of the Canadian. Pretty flat data at the moment. It's going to weaken against the US dollar, unfortunately. Unemployment rate, non-farm employment change on the US dollar. Obviously, key events. Don't expect a big change this time. I don't think it's going to move the market as much as it has done in the past. We've had good data out on non-farm payroll. Last event was good. If anything, I think we may get some slightly poorer data. The data has just been too good. I think it's time that things started to pull back a bit. People realised that maybe it had a bit of a bolster in the economy. It's really pushed things forward, which is great. But I do think we're going to get a little bit of negative data for a period of time. I'm not saying that the economy is not improving. It is. They've laid the foundations to that pretty well. It is happening, but I do think we're going to get some pullbacks on the US dollar, a little bit of weakness, which is also going to give us a bit of a chance for things like our pound, our Aussie dollar to start thriving back as well. Okay, let's move over to the charts. Start by looking at the Aussie dollar chart. Okay, we've got some various alerts coming out at the start of the week, but it's really the ones towards the end of the week that we're interested in. Starting with on Thursday, we've got the unemployment change and the unemployment rate. Okay, this is going to be key. There's been a lot of part-time jobs that have been filled on the Aussie dollar recently, which hasn't really given it any scope to rally on the fact that the unemployment rate has dropped off slightly. It had a bit of a controversial large drop a couple of months ago. When the traders never really saw it in the market, they didn't believe it was happening. It didn't cause the Aussie dollar to rally. What we have got as well on Friday is the RBA monetary policy statement. This is very important. I want to see a slight change in tone. I don't expect them to stop talking the currency down, but I do believe that the floor of this currency here is about 8.6. Okay, so I don't think it's going to get much further than that, and this is going to be where I'm looking for buying opportunities. But let's first of all see what we think might happen throughout the week. What we've got here on the 4-hour chart is we've got this downward trend, and we've got this area of consolidation where it started to form this kind of bearish pennant pattern. Okay, just roughly put the lines in there. Okay, these patterns tend to break out about 3/4 of the way through. So we're looking for a breakout here round about, I think it's about Thursday or Friday, which is going to coincide with some of those data announcements there as well. So where we've got the entry to the pennant pattern here, we're looking at about 150, 160 pips, say. Okay, let's say it breaks out from this point here, which works out to be, I think, let's just double check, 7th. So around about the 6th of November, if it breaks out about this point here, 150 pips down, 160 pips down, it's going to bring it pretty close to that 8600 level. Okay, so what I'm looking to happen next week is, as these data announcements come out, I'm looking whether it happens just before the RBA monetary policy statement on Friday, or whether it happens during the monetary policy on Friday. What I'm looking for is for it to drop down through this pennant pattern, level out at this 8600 level, and that's where I'm going to be looking to buy. Okay, so I'm going to be using that data coming out next week as either a trigger to push it down to my buy price, or if the data comes out positive and hawkish from the monetary policy, then I'll be looking to buy straight away if we're already down there. Okay, so that's how I'm looking to play out the Aussie next week. Okay, great. Let's move over to the Euro. As we know, the Euro has been dropping considerably over a period of time, especially on Friday when we had that good data come out on the US dollar. We had a poor CPI reading from Germany. Germany in big trouble at the moment, starting to head towards deflation. We had a CPI year-on-year flash estimate from the Eurozone on Friday as well. Although that came in line with expectations at 0.4, the core CPI had dropped down to 0.7. This is not good news for the Euro. I gave it a target price of 125 last week. We came down to that target price, just bounced off there, and it's just sat above it at the moment. I'm looking for pullbacks on this downward trend here. Okay, I'm going to be using my Fibonacci as in the Forex Inferno Plus system. I'm going to be looking for those pullbacks. However, the 50% is 12629. I think it's going to struggle to get through 126. Okay, there's a good area of strong support there in the past, and you can see how those candles there, if I just enlarge those things, you can see how they were pushed back up from that price and how they've been pushed back up from the 125. I'm going to be looking for sales around about 126 with a stop loss above the swing high here. Okay, yeah, it is a bigger stop loss, but you're going to have to incorporate that if you want to make some decent sized pips on this. Don't forget, I'm looking for a target of 121. Okay, we've got the ECB press conference next week on the Thursday. I'm expecting that to really move the market. I'm going to be looking at any strong US data, i.e. the non-farm payrolls as well on Friday. Any strong data like that is going to cause this Euro to get further and further down to that 121 level. I would not be surprised if we reach that 121 target next week at all. Okay, so brilliant. We've got the Aussie dollar to look for. We've got the Euro to look at. Next one we're going to be looking at is the New Zealand dollar. Okay, so let's go over to that chart. Okay, the New Zealand dollar, we made some fantastic pips out of this last week. We took sell positions when it came out of that pennant pattern, suggested the pullback to that pennant pattern there as well, and then another sell. It did just that, okay, on the FOMC and the RBNZ talking it down. It collapsed there at that 8,000, just below that 8,000 level. We had some great pips out of it. It's pulled back, and we've also had another sell from that 7,870 level as well. Okay, so down, we're up on there at the moment by quite a few pips, by about 80 pips. So what's the future for this next week? Okay, well, we've got the RBNZ. I've got some announcements next week. We've got the New Zealand dollar employment change on Tuesday, quarter on quarter, expected to come in slightly stronger, and we've got the unemployment rate as well expected to drop. So we could well see a little bit of a rally on this. Okay, so I'm probably going to be looking to close those positions down on Monday. But what I am going to use that unemployment rate and the employment change, if it comes in good, I'm going to be looking for those spikes up, probably back to that same sort of area, round about the this 7,970 area, maybe 7,880, and then I'm going to be looking for it to fall again when the RBNZ. Don't forget, the RBNZ are still talking this down. I still believe it's going to come down to 65 cents of the dollar. So I'm selling all the way, and I'm just looking for good data off the charts here, off the news alerts, just to push it back so that I can take sell positions. Okay, so the next one that we're really going to be looking at is going to be the pound as well next week. All right, so we've got the Aussie dollar, we've got the euro, got the New Zealand dollar, and then the fourth one that I'm really going to be looking to trade is the pound. So let's move over to that chart as well. Okay, so we had the head and shoulders pattern, which was developing quite nicely, suggesting that the trend was on the turnaround. It came up to the neckline here, and then it struggled, and then the FOMC meeting caused it to drop off. But then we continued to get strong data from the US, but you can see here how this pound struggled to stay below this 1.6. It kept pulling back up to this 1.6, nipping above it, and then just pulling back down again. I'm not suggesting that it by any means that it's finished its downward journey, but what I am suggesting is that this area of confluence here is giving me a little bit more reason to believe that we could start to see more upside momentum next week. So what we need to do is look through our chart and look for those times of volatility and where that can happen. We've got some key data out. Services PMI. We've got the construction PMI. We've also got manufacturing PMI. So we've got some key alerts coming out. They're all expected to come in softer, but if we get any sort of relief on that, any of those data alerts start to give us a little bit better data, then it could lead us into the MPC meeting rate statement on Thursday with a good standing. Okay, I'm hoping, and what I'm looking for, the official bank rate I don't expect to change on this occasion. Asset purchase facility I don't expect to change either. But what I'm looking for is the MPC rate statement to come in with a slightly hawkish tone. But don't forget, we've still got 2 members that want to vote that are voting for rate hikes sooner rather than later. And there was a shadow member as well that was out there that was looking for rate hikes. Mark Carney did say that he wasn't going to wait for wages before he raised interest rates. Holding interest rates back for longer can be just as damaging for the economy as if they raise them too quickly. But what I'm looking at here is the difference between the pound rate hike and the US dollar rate hike. As long as the pound's going to raise their rate sooner, then we should see it start to rally against the US dollar. So in that MPC rate statement, I'm trying to look for any inkling that they're going to be raising sooner than the US dollar. US dollar now looking to be pushed back towards the end of 2015, beginning of 2016, whereas the pound is looking pretty solid for the middle of 2015. So hopefully we're going to start to see that rally. It's right down at the bottom now. I'm going to be looking for buy positions at the bottom of these candles. Okay, so if any dips down to that 159.50 area, I'll be looking for buy opportunities. If it goes through, then again at the head here that we had from this inverted head and shoulders, I'll be looking for buy positions from there, and then the next spot after that is the 157.50 support. Okay, so I am looking for this pound to start to rally. I'm going to be looking for those data points to use as a catapult for that, a catalyst if you like. Okay, so that's pretty well much all I'm looking to trade. There is quite a lot of data out. I'll be looking to, and in the live room, we'll be nipping in and out of these trades as well, taking profit, jumping back in, taking profit, jumping back in, etc., etc. But for those on the Forex Inferno Plus system, then basically this is how I'm looking to trade these currency pairs over the next. There's 4 currency pairs there that I'm really keeping an eye on: Aussie dollar, Euro US dollar, pound US dollar, and New Zealand dollar US dollar as well. Don't forget to keep your eyes open on the cross currencies. There was always opportunities there, things like the pound yen. We've got a weaker yen at the moment. Hopefully we're going to start getting a stronger pound. It's already started to rally quite violently, but there is room left. Okay, so look for those pullbacks, use the Fibonacci, and look to get in for buy trades. Okay, thanks for watching. I hope you can make some pips, and I'll see you soon.